We have, in fact, had over 100 IPOs. About 85 operating companies have come public this year. So we're on NASDAQ, and we're proud of that. But as we look forward, we have about 200 companies on file to list on NASDAQ going forward. That's a little lower than we've seen in the last few years. We've been between 250 and 300. But I would expect that the capital markets will remain quiet for at least the first half of 23.
I think that investors were hoping to hear a toning down of the hawkishness of the Federal Reserve, implying that they might consider pausing and then cutting interest rates by the end of 2023.
It's better to regulate the industry instead of trying to fight against it. I would expect recovery. So I think, look, 2022 was a really nasty year. The last 6 hours was like too much had happened.
Stocks did their best to make up for lost ground towards the end of 2022. Indeed, since the year began, equities have gone nowhere but down. This despite the reign of optimism around a soft landing and very generous liquidity propped up by previous years of quantitative easing and fiscal expansion. For US investors, many analysts say 2023 could seem like 2 years wrapped into one, with the stock market first crashing in anticipation of a recession, only to rebound as the outlook improves towards 2024. Others predict a mild recession in the latter half of the year. The one known constant is the US Federal Reserve moving with no-nonsense resolve to curb still rampant inflation and restore price stability to a level near the central bank's annual inflation target of 2%, which for now still looks like a dream. But some dreams do come true, and most planes, despite supersonic speed and odd turns in the weather, still land on the tarmac, safely that is. The Federal Reserve will not be hiking rates forever, and once it begins to pause, the gloom and dark clouds will lift and the stage for a rally will be set. We still think the Fed will be pausing earlier than, say, the European Central Bank and the Bank of England, but I wouldn't count on it yet. In 2023, the bug of extreme optimism will clear, and like Warren Buffett once said, when the tide goes out, we'll see who's swimming naked. The recent debacle with cryptos at FTX is not accidental. Rather, it's a sign of closure to the silly things done when markets were awash with liquidity and investors at a loss on where to park their cash. In 2023, many customers will be wanting their money back and looking for safer havens and defensive plays. While in 2021, billions were made in months, billions could be lost in weeks in 2023. Some forecasts on the major indices, the S&P 500 is projected by most analysts to fall from its current level by about 10% in 2023, which is still a welcome change compared with their performance in 2022, when the index was down 18.3% as at December the 15th. The technology-heavy NASDAQ crashed by 30% in 2022, emerging as the biggest loser. But analysts also see it recovering as the digital revolution regains momentum in 2023. But let's be clear, the global economy isn't in very bad shape. Job growth all over the world has been robust. Consumers have saved up during the COVID years and are spending, and corporate earnings are decent. The strong labour market in particular is unfortunately helping to keep inflation uncomfortably high and keeping central banks on their tightening trajectory. Whatever you call it, a soft landing, sub-trend growth, mild recession, it will be the most widely anticipated recession of all time as the world goes back to the old normal, when the developed economies had inflation and interest rates of under 3% to 4%, and the economy growing around 2%.
We saw of late interest rate sensitive parts of the US economy, such as housing, feeling the pain more as rates climbed. Also with home sales and prices down sharply, and the demand for goods, which are typically financed, also falling. Also in the US, households had amassed about $2.3 trillion in savings during the COVID pandemic, which is down to about $1 trillion today and could easily run out by the middle of next year. But like most things all over the world, there will be winners and there will be losers. Most analysts are projecting equities that in 2023 will be overweight, that is, which will outperform their sector average over the next 8 to 12 months, could include energy, healthcare, infrastructure, pharmaceuticals, financial, utilities, and technology services. All these sectors have defensive characteristics and they could be doing better than others. Also, watch for surprise improvements with aluminium products, diversified technology giants like Alphabet, Amazon, and Microsoft, and don't underestimate the recovery of budget airlines. Equities that will struggle are likely to be more in real estate, consumer cyclicals, that is, non-essential consumer goods and services like high-end apparel, entertainment, leisure activities, and automobiles. Also, non-essential retail, technology, hardware markets could be challenged. With yields now at decade highs, fixed income in 2023 may now be able to fulfill some of its roles in portfolios once again. The asset allocation view on bonds and government treasuries, which has historically offered more stability and diversification, will continue to turn more favorable. For crypto investors, the only thing to celebrate about 2022 is that the year is over as it fights for its life amid the flurry of scandals, bankruptcies, and fury in Washington over its freewheeling, if not fraudulent ways. Not to add, regulators still plotting on the best way to rein in all the excess. Since late 2021, Bitcoin lost 67% and the token market has been down by over $2 trillion. Already one of the biggest bubbles, financial bubbles, to burst in history. Expect the chaos and carnage to continue well into 2023 as aftershocks continue to be felt. Bitcoin has lately been recovering as inflation appears to be easing, giving so-called risk assets a boost. But the headwinds that have pressured cryptos all year, including high interest rates and tighter global money supply, have not quite abated. Crypto investment will not be for the faint-hearted in 2023. It is only fair to admit that what happened with FTX had nothing to do with blockchain technology, which does have many other more constructive uses.
Still on markets, and perhaps ending with some cautious optimism, China is still the only major economy in the world on track to see decent growth in 2023 in corporate profits and gross domestic product, as policymakers are focused on firing up economic activity after a bad ending to 2022 with COVID. If that happens, it could be better for metals, autos, oil-related stocks and consumer goods. And given China's voracious appetite for a wide array of consumer goods, that's good news to sustain our optimism for the global economy. Will China once again do the heavy lifting for the global economy? We shall see, but it certainly raises the odds that the world can avert a recession, especially, as can happen, we see both the US and Europe down in the third and fourth quarters of 2023.